It is Valentine's Day weekend. There's a lot of love in the air. Maybe not in DC, but there's a lot of love in the air in Hawaii. I can feel it. Weather's getting better. I'm happier. The sun's out. Winds aren't like pounding our house anymore. And you know what? Hopefully it's starting to thaw out on the mainland. But you know what moves on no matter what? The housing market. That's what we're going to talk about this week. Three big things, of course. Prices are steady. Inventory is up after a dip in December. We saw an increase in inventory in January, and rates. VA rates were down this week. Rates were down across the board, although it was not a straight line down. It was a little bit of a roller coaster, and we'll kind of get into that. So what is the headline news? So headline news this week, we had a big jobs report. The BLS, Bureau of Labor Statistics jobs report was supposed to come out last Friday. It came out on Wednesday, and it really was a shocker. But when you really dig deep into it, you realize these numbers may not be 100% accurate. Although President Trump certainly loved them, they may portend that all is not well in the economic and in the jobs market. We also got the Honolulu Board of Realtors housing market report for January, and a pretty solid start to the year, I would say, in 2026. Existing home sales across the country declined. That's no real big surprise considering the weather we had in January. And then we're going to talk about working on your fitness. I'm not talking about your physical fitness, but your financial fitness. What do you need to do to get into position to buy a home so that, you know what, by the summertime, you're in a home and you own a home and you're not hiding out in a rental. You know, it's kind of like getting in fitness for the beach in the summertime. Right, you spend all winter long trying to get into shape, remove all of that fat that you put on from Thanksgiving and the holiday season. Well, what can you do to get in your financial shape so that when the summer comes, you're not moving into another rental or base housing, you're moving into your own house. And then the last thing we'll look at here is the rates and see how rates move this week. So the January jobs report really crushed all expectations. The expectations were we were going to have a 55,000 increase in new jobs. We had 130,000 new jobs. That was way above expectations. And you saw actual interest rates on Wednesday when this report go out. Interest rates shot up. Come Thursday, though, there was a little bit of a backlash on really just how accurate those numbers were. And because every month, in addition to getting the new jobs, we also get a revision to the previous 2 months reports. And we've had up to 100,000 in negative revisions. This last month, or for January, the November and December revisions were minus 17,000. So really, it was kind of once you dig into the report, you realize it really wasn't as good as it may seem, or it seemed at that when it was released, but still a good report. Unemployment for the second month in a row dropped and went from 4.4 down to 4.3%, and it was legit in the 4.2s. It was 4.28, which rounds up to 4.3. So, and the unemployment report is from a household survey versus the BLS jobs report, which is not reported by the businesses. You can see as well, average hourly earnings higher than the rate of inflation. So that is good news. We want earnings to go up more so than we want inflation on the products that we buy. So inflation, average hourly earnings up 3.7%. So that was good. Average weekly earnings up 4.3%. So both, again, positive numbers. But that unemployment number down to 4.3, that was a big shock, and it could have gone lower. Now, where are all of these new jobs coming from? I tell you where they're not coming from. They're not coming from the government, which is good because our government is, quite frankly, we got too many people working in the government still. So those are good numbers. Where are all these numbers coming from the private sector? And here's my one problem with that. If the private sector report or the small and medium-sized businesses are getting all these new hires, then why does the ADP, the private sector job report, show such a small number of new jobs for January? So again, these two reports are really 180 out, and again, kind of leads me to believe that there is some inaccuracy in the BLS jobs report. I would say more accuracy in the ADP jobs report because it really is a lot more steady over the course of time. Not as high, not as many fluctuations as you see in the BLS jobs report. Let's take a look at the Honolulu Board of Realtors Housing report for January. What we see in the Oahu market is stability in the single family home sales and a little bit of softer condo activity, but both single family and condo median sales prices were both up year over year and right around the same month over month at 1.122 million, 500,000 for single family homes and 529,000 for condos. You can see that home sales year over year were a little lower for single family homes and about almost 5% lower for condos. But let's just break this down month over month. I like to see that trend, so we'll get into that. You're looking at the monthly indicators, you can see a huge drop off in January, and that's pretty normal. You normally see a drop off in closed sales. This is a big one, a 28% drop in single family home sales month over month, from 270 down to 194 for single family homes, and then a 17.5% drop from 360 down to 297 for condos. You can see that median sales price was steady, if anything up a little bit for condos, but for both condos and for single family homes. Days on market were up for both single family homes and condos. Days on market 44 to 47 for condos, and then 22 to 27 days for single family homes. So homes stayed on the market a little longer in the month of January than they did in the month of December. You also see a huge spike in new listings. We'll get into that. We'll break it down a little more, in one of the next slides, but still a big rebound in new listings. I think a lot of it had to do with people, hey, starting the year off, New Year's resolutions, I'm going to sell my home. And you start seeing a lot of people putting the house on the market. I still think it's too early, but everybody's a little different. They all have their needs. Pending home sales were up 19.5% for single family homes and 33% for condos. So that's a big change. And what that means, what we're going to see in February, we should see some solid numbers in February. Months of supply were up for both single family homes and for condos. We're at 6 months of supply for condos. Squarely in a buyer's market for condos. Single family home at 2.8. We're kind of a mixed market because that inventory level really is low for single family homes. And if you look in certain areas of the island, certainly windward side, you're seeing a single family home on the market, boom, it's off market by the end of the week. Even in Eva Beach and some of the areas, Ocean Point, for instance, that has a very low maintenance fee, very few single family homes on the market, and they're going quick, especially if they're priced right. All right, let's take a look at new listings. We had a huge spike in new listings, over 1,000 again. We were about 6 months there where we had less than 1,000 new listings, but we're back over 1,000 at just 1,039 new listings in the month of January. That's nearly double, really, for single family homes. 186 to 343 new listings. So again, single family homes coming on the market. People got to move. They can't keep their homes anymore. They're going to take advantage of the equity they have. And you saw that obviously in the month of January. And also I would say the December drop in mortgage rates certainly helped to push people to put their homes on the market. Active inventory, we had a nice increase. We were at 2,800 in December. January, we're at 2,884, so almost back to 2,900, and those numbers would have been higher, but again, pending home sales, signaling the decrease in mortgage rates overall. You saw more pending home sales, so active inventory is coming down, but it could be higher. You know what? We'll see what happens next month. And as we go into the spring, I do think you're going to see a lot more people put their homes on market, and you're going to see a lot more buyers, especially as interest rates start to come down. Closed sales. We have 491 closed sales in the month of January. That is a really, really low number. And if you break that down a little more, 60% of single family homes in January were sold between the price range of $800,000 and $1.4 million. Now, almost 60%. That's where it's still affordable. If you want, can you believe that 1.4 million is considered affordable? Well, it is, and trust me, I see these homes going off the market all the time. Again, you saw a big drop from 630 in December down to 491 in January. Expect those closed sales to go up again, especially considering we have such a large number of pending home sales in the month of January. That equates to closings in February. And median sales price, again, steady Eddie since mid-2022, right between 1.1, 1.2 million. Again, we're at 1.122 $1,500,000 for single family homes, $529,000 for condos. So right in that range, you can look, the elevator is stuck. But once we get rates lower, again, probably VA at around 5.5%, and then conventional, right, just into the fives. Once you see those numbers, you're gonna see median sales price start to go up. Across the nation, we got the existing home sales report that came out on Thursday. We had a strong jump in December, but a huge drop in January. And our pace for existing home sales dropped from 4.27 million down to 3.91 million. And that is no surprise because the weather in January sucked across the board, and that really put a damper on people buying homes, getting out to even look at homes. Down 8.4% month over month, down 4.4% year over year in existing home sales. You even saw a drop in the median sales price of homes down to $397,000, which is still up almost 1% year over year, but down 2% month over month. You can see inventory down slightly, 1.22 million. Increase in days on market from 41 to 46 days, 3.7 months of supply. So again, an opportunity is out there for buyers with number of existing home sales coming down. And look at first-time home buyers, again, back over 30% at 31% of all home purchases. So really good news, really positive news. And affordability, since the rates have come down, our affordability is at the best point it's been in the last 5 years. So again, I do think you're gonna see a lot more people getting into the market. They're gonna see these rates coming down. Some people are gonna wait though. What's the cost of waiting? I got a great video on that. You can take a look at that when we're done. But that cost of waiting, that's legit. And if you think you're gonna save money getting a 5% interest rate in 6 months when you could get a 5.25 right now using seller credits, the numbers prove otherwise. Let's talk about getting into shape. I'm not talking about physical shape. I've been working out a lot this year. I'm feeling great, but I'm talking about your financial shape. And I'm talking specifically about the financial shape, your readiness to buy a home. There are 5 smart moves that you can make before you get a mortgage, before you even apply for a mortgage. First, check your credit report. You get to pull it from each of the credit bureaus free once a year. So if you just pull one every quarter, you'll get to see a good idea. And there are also good applications. Credit Karma, I have Credit Karma. I don't like it because I get ads. I have another app called Key Steps. Again, there'll be a link for that if you want. It's a free app. You get no advertisement, and it actually helps you change your credit. It helps you make adjustments to your debt so that you can get your credit score up. It's a great tool. I use it. I love it. Again, it'll be in the comments, but the Key Steps app, love it. You should try it, but you definitely want to be taking a look at your credit report. Maybe you're not going to buy a home for another 6 months. Well, the time to find out that you have a late charge on a credit card is not in 6 months, it's right now. So you can take steps to improve your credit score, maybe to get a collection removed from your credit report. Don't wait, don't bury your hand in the sand, take advantage of it now. The other is organize your finances. Gather all your income docs, gather your bank statements, and figure out what your debt list. I know when I used to do that, and I still do this, I don't keep credit card debt, but when I had credit card debt, I kept track of every single debt I had, what the total balance was, what the monthly payment was, what the monthly interest rate was. I tackled those, doing a debt snowball, paying the highest interest rate credit card off first, working my way down to the lowest so that I was debt-free or as debt-free as possible by the time I actually went to go buy a home. Third is set a budget. Man, setting a budget is so important, people. And if you don't set a budget, you're really not going to know whether or not you can afford to buy a home. You know what? People don't want to set a budget because it's hard, but they don't want to face their checking account. They don't want to face their bank statement. They don't want to see where their money's going because people know deep down inside, I'm going to Starbucks way too much, or I'm going to Chick-fil-A way too much, or I'm spending all this money on Netflix, Hulu, Amazon, all these things that I don't even watch. I'll tell you what, get serious, set your budget. And then you gotta have some money set aside. Save for the upfront costs, all right? When you're buying a home, the closing costs have to be paid at closing. Doesn't matter if it's conventional or VA. Right now, sellers are paying a lot of the closing costs, but that won't happen in 6 months if rates continue to go down. So you need to have between 1.5% to 2% of your purchase price saved up to cover your closing costs, and then to cover the cost of moving in a home. Whether you have to pay for your movers, you have to pay for some new furniture, you have to turn on utilities. Those are things that you have to budget for, and the time to do that is now, while you have 6 months or so to put that money aside. And then finally, talk to a loan officer. I do this all the time for clients. We will go through a pre-qualification right up front. Well, I'll at least show you what your budget is. I won't pull your credit, but I'll let you pull your credit and you send it to me, and then we'll run through the numbers. We'll go through scenarios, and I'll help you make the best decision right now, all right, to set a course to homeownership later. All right, so that's how you get in financial shape. You don't bury your head in the sand. You get out, you work out, you build a sweat, and you put your finances in order, and you're ready to go. And finally, we're gonna finish with rates. You can see we had rates start to go down this week. They were under 5.8. They stayed down, got down to about 5.7. And then we had the BLS jobs report come out on Wednesday. You saw the rates kind of etch up, but now they've come back down. Tomorrow or Friday, when the consumer price index, the next inflation report comes out, if inflation is below expectations, all right, expect interest rates to come down some more. But if inflation comes up a little higher, and there's really nobody knows for sure, all right? But if inflation's higher, expect interest rates to go back up and probably closer, maybe even above 5.8. That's all I got for you this week. Have a great week. Again, take a look at the Key Steps app. Take a look at my cost of waiting video. Those will really help you understand what the cost of waiting is. It's time, and time is money.